Bank leaders understand the connection between sound banking policy and the profitability of their institutions. A single misguided policy decision can have a dramatic impact on bank performance across the entire industry. Shaping banking policy requires a coordinated, nationwide effort because the forces that influence policy exist in every state. Most banking policy is driven by Congress, and members of Congress vote based on the voices they hear from home. That means effective federal advocacy starts locally. Each state banking association plays a critical role in building strong, trusted relationships with its own federal delegation, state by state, relationship by relationship. Through an alliance of the 51 state banking associations, we've built the infrastructure over many decades to organize and connect local bankers to policymakers. Banking legislation requires 218 House votes and 60 Senate votes to pass. While the American Bankers Association in Washington coordinates strategy and individual bank lobbyists protect specific interests, the crucial work of securing votes happens locally in each state through the Alliance Network of State Banking Associations. They organize bankers and allies to influence congressional decisions. Historically, there have been enough banks to support a strong association in every state. But the strength of that network is being weakened by consolidation. When banks merge within a state, fewer institutions remain to support and sustain advocacy efforts. And when one bank acquires another across state lines and then chooses not to engage in the local banking association, it reduces the number of institutions and resources to support advocacy relationships in that state. It's imperative that each bank leader understands that their bank has a direct interest in the strength of our advocacy network in all 50 states. With continued consolidation, the industry will have to find new ways to maintain this network. For now, at a minimum, we need every bank to support the advocacy efforts in each state where they have banking operations. When a bank expands over state lines, it's tempting to let other banks in that state carry the advocacy burden, but that approach diminishes our effectiveness in that state and our ability to influence federal policy that impacts all banks. When engagement is strong in every state, the entire industry benefits from a stronger, more effective voice. For example, banking policy is primarily driven by the chairs of the Senate Banking Committee and the House Financial Services Committee. Those positions can change every election cycle. And in just the last 25 years, the chairs of those committees have come from 13 different states. Even if your bank does not operate in all of those states, you have benefited from the relationships built and maintained there over time. And banking policy doesn't stop with Congress. Decisions by state legislatures, attorneys general, and courts in one single state can ripple across the entire banking system. That reality reinforces the need for effective, well-resourced advocacy in every state. Strong advocacy in every state requires sustained financial participation. Our success depends upon your bank's financial commitment, especially in the states where you're conducting business. The return on your investment is a stronger policy environment for banks nationwide.